welcome to this week. What we're going to be discussing, as I mentioned to you guys last week, that I want to touch base more about trend pullback failure edges and some stuff about Eclipse. So this week we're going to be focusing, before we dive into the what and the how and when and all that stuff, we need to more focus on the theory part. I need you to understand first how this design is made, what goes behind it, and then we can get onto the charts in the upcoming weeks, and we can go into details of remember what we talked about the previous week, and then we can apply it. So we're gonna go talk about into the theory. We're gonna start, this video for trend pullback failure, and then in the next video we can go more into the concept of the eclipse trades. Okay. So in this particular one, we're going to be talking about the trend pullback failure. So I'm going to show you a little example here. Okay, so one of the things that we talk about that you're familiar with from the MPA 2.0 part is the cheese trade, right? Which is something like this. On a lower time frame, it goes up, comes down, goes up, digests further, and then it's like a money spot, and then from the money spot, it just goes down, right? So you're used to that one. However, now what happens is that beyond that, okay, if it takes longer and it goes beyond that, it then becomes from a 3-minute chart. Okay, goes from a 3-minute chart. Let's say he doesn't make a lower low and he goes right back up. And then it hangs around here, goes higher, and what we call all of this would be a set 1, and then this would be a set 2, right? Just a very long, like exaggerated pullback. This then becomes a 60-15 trade, right? Now let me show you what I mean by that. So let me remove all this so you can see it clearer. So let's say the movement is same thing, down, but that 3-minute trade that you were initially trying to do, the cheese trade, on a 15-minute chart, this is what it's going to look like. Okay. You won't see much details into the movements. It'll look like that. Okay. However, if it's unable to make a lower low, imagine the amount of time it takes on a 15-minute chart to go from this area during the pullback all the way to this area to do the attempt to make the lower low. Okay. It takes a lot of time, which means you are getting further and further away in terms of time. Okay, not in terms of pips or anything. You're getting further and further away in terms of time from the big boy. So the question comes is he still around? Right? And that's when it says, okay, well, if he can't make a lower low, that means this price was not good enough. So all of this will be considered set 1. And now we need prices to do whatever it needs to do, hang around here, and then begin going upwards and doing its exact same design pattern approximately for a set 2. And then from set 2, depending on what news is coming up and what time of day it is, we can say, okay, from here the news is coming out, and we will determine if this is going to get going. Now, let's say the news comes out. You're already in the right direction. Okay, we're not going to be talking about direction. You've learned direction and everything in MPA 2.0. You know how to pick a trade. You know how to be on the right side of the trade. Right now, we're talking about what happens when you were on the right side yesterday. You were making money, but when it ranged, you exited. But you're here the next day and you're like, what's going on with this thing? We're now in a set 2, which is now an iconic trader. It's an anticipation trade. So now this trade is lining up with a news release. So let's say in the next 10 minutes, the news is going to release, and you're like, well, I can see why it hasn't left yet, because a news is releasing in 10 minutes, and it seems to be a pretty big news. Okay, now focus on the word I just said. It seems to be a pretty big news. The reason why it makes a difference that it needs a pretty big news is because it needs to travel from this price all the way down to this price and maybe even beyond. You cannot do that through just technical analysis. It needs a fundamental reason to panic the market or increase greed in the market, whichever way. Okay, whichever way you look at it. But there will always be a panic on some side of the market. Okay, if this is Euro USD, it means euro is getting extremely weak. Okay? If this chart was USD Swiss franc, it means US dollar is getting extremely weak, right? So panic will set in. Panic will set in no matter what pair you're looking at. It basically means if it's good for this currency, it's probably bad for the other one. So it's panic on that side, right? So same thing. So it's always the case of panic that makes people take drastic measures and try to save their money and move it around a bit. Okay? So having that said, where the trend pullback edge comes in. Okay, so let's go back to that analysis of within 10 minutes the news is going to come out. So it's just hovering around a little bit and then the news just comes out. The news comes out and it's bad news. Okay, so let's say it's bad news for euro if this is euro USD, for example. Okay, so if this is euro USD, the news comes out and it's bad news for euro. And it's not just regular bad news, it's like a GDP news, and it's a shockingly bad news. Like, okay, we've got a home run trade coming up for us. So sometimes you'll see that, okay, this thing's should be going all the way down, 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 down. Okay, that's one side of things. Sometimes you'll see the euro news, it's a big news, it's GDP, okay, like gross domestic product, or it's an interest rate or something, and the expectation, let's say the previous number was, let's say, 10 million. Okay, whatever number it is, doesn't matter. Previous number was 10 million. They're expecting the markets to do 5 million. That means they're expecting something really, really bad, right? And the market actually came out and it did 7 million. These are the times where this edge will come into handy for you, because although it's a big news, which means big movements coming, the expectation number versus what actually came out, sorry, that's a really bad E, expectation number versus what actually came out is a lot different, okay? Which means it's still bad, compared to last time, it's still bad, right? They're all bad news. It's just, it's slightly better than expected. Now that's a little bit of a problem. So what happens is the market starts to go down, but it starts to go down like this. A couple of cheese trades get in there, they do some of their money, but it goes down. But yet, once again, after a set 2, it is unable to make a lower low. It is unable to make a lower low. Now, I want you to focus very, very carefully on this. You do not buy ever here to do a counter trend to do a set 2. You want to avoid that. Although it's very fast, okay, you want to use your skills that you've learned in MPA 2.0 to back you up at all times. Okay, here's what I mean by that. Right now, this is supposed to be a trend trade, right? The initial trend trade was supposed to go on set 1. Did it go? No. So it went up for a set 2. Okay, fair enough. And then the news was supposed to take it all the way down. Did it go? No, it still didn't go. It's telling us now there's been several attempts at this. It's unable to go down. This big boy is gone missing. He's no longer interested in this. He's gone missing, which means prices are still no longer good at this price. Now, as this thing starts failing in this area, what you will notice is it will develop a range. Okay, it will develop a range and it will start doing stuff like this. He'll do that. And then London might open, and you're going to be like, look at New York. New York couldn't do anything. Okay, Asia dropped all the way down. But, after Asia, after Asia, when London opened, London couldn't do much. It was sideways. And then New York opens again the next day, and it starts to break above. That cheese that's coming up after that, any pullbacks on that you do a buy on that cheese, it's going to be a little bit whipsawy. Okay? It's not going to be clear cut like it goes up like that, pulls back a little bit, and then bam. It won't be clear cut like that. It will take its time a little bit and it will mess around. It'll mess around and it will inch its way higher. And then as it gets through this area, it will then start to fly. Okay? Conservative traders, your area is up here. Aggressive traders, you want to learn to get in only when you see some crazy spikes. Never before. Okay, let me repeat that. Conservative traders, your area is a lot higher. Okay? But aggressive traders, you need to be aware that even though you have a cheese movement here, don't be afraid if the market spikes down and comes right back. It's going to look like, oh my God, my cheese is not working, but then it recovers again. You're like, well, why is it recovering? It doesn't make any sense. And then when you zoom out to the hourly chart, you're like, oh, I can see it's a trend pullback failure day. It's a big trade coming up. However, it's going to take a little bit of a rough movement to get it going. Okay? Because what it is you're trying to get out of the downtrend and switch to the uptrend. So to do that process, this area can get a little bit messy. Okay? It will be aggressive. It will start moving, don't get me wrong. It won't just be dead and flatlined. It will have a heartbeat, but it will start getting more aggressive. Now, up until this point, if I stop you right now and saying, okay, everything you've learned, great. If you just pause and you look at the chart in front of you on your screen, you're going to be like, okay, we're going to have to do this one more time because it's just looking like a whole bunch of chicken scratch, right? Let's do it again. Let's do it again. You know, practice makes perfect. Let me do this all over again. I'm going to explain it to you one more time in the same direction. Then I'm going to explain it one more time in inverse direction as if we're going for a buy. And it will really help you cement the theory of how to do this correctly, because you need to get this down first in terms of how. Because once I show you on a chart, what's going to happen is the moment you sit in front of a chart, you're going to feel go, 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 go without thinking very clearly of, okay, what happens next? What is supposed to happen next and next and next? All that stuff. Yeah? So let's go ahead and do this again. Okay? I'm going to delete this whole thing. I'm going to make it nice and easy and smooth. All right. So far, so good. No complex drawings, right? All right, so nice little downtrend coming in. You've done your research. You know the markets are in for a sell, okay? A cheese trade, you know, is trying to perform, and then the cheese trade doesn't work. This is a 15-minute chart now, okay? It's a 15-minute chart, okay? You can apply this to higher time frames as well. This concept, it will apply there as well. So 15-minute chart in this particular example, it's unable to make a lower low because that was supposed to be your cheese trade. So you're like, okay, that means that must be my set one is probably going to go up to get a better price than here because that price was not good enough to make a low. That means a big boy wants a better price. So the next day goes in, the prices get higher and higher and higher. And then from this area, it starts hovering around, doing all sorts of things. And you're waiting for, well, when will it go back down? I know we're in a set 2. I know we got a better price than set 1, right? The price is slightly higher, right? Price is higher. So we know we got a better price than set 1. When is it going to go? Because I thought it was going to leave here, but it didn't leave there. Then I thought it was going to leave here, but then it went sideways after that. Then I thought it was going to leave here. You know, so instead of guessing where it's going to go, you need to understand one thing. For that big move to move, you need not only market open, you also need a fundamental driver behind it. And preferably a strong one, a big one, right? You know, so for those of you who are like, oh, Naveen, I trade 1 hour, or I trade the 4 hours, or I trade the daily. Well, you want to make a set 1, set 2 move all the way down, then you need even a bigger fundamental driver. You need interest rates. You need coronavirus backing you up. You need all kinds of stuff to really help you propel that trade going further. Okay? All right. So now, in this particular case, the news is due to release in 1 hour. So you're standing by, you're like, 1 hour, that's a long time. And the trade starts doing this. But it's not news time yet. And it's like, oh no, is it leaving? Right? Is it leaving? And it feels like, you know, the world has come to an end. Okay, it's the worst drawing I've done, but it looks like a mosquito man. But anyways, it looks like it's leaving, but you have to trust in, you gotta wait for that news to come in. Okay, you want to wait for that news to come in because that news is the only thing that can make this thing go. Okay, it's the only thing that can make this thing go. So, having that said, the news kicks in and it does this. And you're like, oh no. Okay, but the ones who are calm and you're trying to anticipate this, you're like, well, the news came out negative, it went up, maybe it's a fake. But do not forget your knowledge and your education by saying, just because it's come up doesn't mean I got a good price, let me hit the sell from here. No, 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 no. It means I got a large meal, let me digest through it. So 2 ways you can enter this. If it comes down, you can enter it there because it came down nice and quickly. Or if it comes down here, like that, you still can't enter it. You gotta digest that thing. Okay, now you can. Okay, now you're safe to go. And he might even do this one more time before going. Okay, so it takes time. It takes time. So anyone getting into here, because of so much panic and stress, will try to get out, get back in, get out, get back in, get out, get back in. And by the time they actually catch the real move, they're just paying all the fees and dues to all the previous trades. It's like paying off a loan shark or something like that. It's like, it's a horrible feeling. So, and don't get me wrong, I used to do this too. I still do it sometimes. It's a horrible thing to do. So please learn from my experience on this that you have to be careful with this. Otherwise, by the time you actually catch the trade, you're just paying your fees, right? All right. So having that said, the trend pullback concept now comes in is when this trade starts to move, it still cannot make a lower low. And once that happens, okay, let's say he does that, and then he does that right back, and you're like, huh? I thought he was gonna go down forever and then make a new hole on my floor. But unfortunately he didn't. He stopped yet once again. This is what we call a trend pullback failure. Okay? Trend pullback failure. Okay? So, guys, whenever you guys are messaging the support, avoid using acronyms. I know I'm writing it like an acronym, but do not use acronyms. It really can misguide and confuse everyone. Try to type out the whole word as much as you can. Okay? So trend pullback failure happens right around here. So as this happens, what's going to happen is because he's going to have to lay around, it'll do something like that. That is one way. Okay, it'll do something like that. And as the next day opens, the next session, you will break a session first. It will become like as if it's a cheese, and people on a 3-minute will just look at it like this, like, oh, it's just a nice little cheese breaking out, but they won't notice it's a whole trend pullback failure that's been running for a very, very long time, right? It's been going for like 3 days, basically. And then now it's come out like this. What happens is around this time, when you get ready for that cheese tray that you would normally buy right there, it's gonna be a little bit more aggressive like that, okay, before it can get going, which means on these type of days, conservative traders, that cheese for you is standby. Do not touch it. But aggressive traders, that means for you is the area where you would normally get in, you would say no, no, no. Let it spike even further below. Let it look like it's leaving and spike all the way back down. I gotta get that price as low as I can. Let it look like it's gonna drop down and keep going for the sell side. It is only then I'll be interested in it. Imagine as if what it's doing is, if I was to take this whole downtrend and straighten it out, then that V happens up, right? This V here, and then it goes sideways, then it goes higher, and then it's doing all this whipsaw stuff. All it's doing is you're just trying to digest through this. It's giving you some headaches here, but then it gets higher, and then it digests more, and this digestion is a little bit smoother. Okay, it's a little bit smoother. So conservative traders, you're more involved here. Aggressive traders, you're more involved here, but you have to be careful of where you get involved. So if you're aggressive, there's nothing wrong with being aggressive. just practice on being at a lower price as much as you can. For conservative traders, once you're up in this area, you're a little bit more confirmed that the trend pullback failure is going to give you a decent trade to go. Okay, so nothing to worry about there. All right, so far so good. So far so good. All right, so let's do this. Let me get rid of that upper one. I'm going to give you another little scenario. Okay, I know this video has gone up to like 20 minutes. I'm going to give you one more scenario on this. Sometimes the market will do this immediately. It'll go up like that. Okay, what's going to happen once it goes up like that? It's still a trend pullback failure. So the thing is that he was supposed to leave during this downtrend, and he hasn't left yet. Okay, you have to investigate what this uptrend is. Maybe it's a news event that came in with high volume and all that stuff. We'll get into volumes later. Okay, but for now, you have to investigate why this up move happened. Maybe the direction has changed and the big boys are looking for the buy side now. But in case it just moved up like that and without any purpose or reason behind it, what this is going to do is you're going to try to digest it as if you're selling it, which means it will try to do this. Look like he's going, but it's not going to go. It's going to go lower. Let's digest it. Okay. And then it will spike it. And only around here can you consider buying it. You will be lucky enough to get this as a cheese that is a fake cheese. It will cheese below, and it looks like we should prepare for pullback sales, but it will recover and go back the other way. And those of you who have an overview of what is going on can actually grab it onto the other side once it gets above that area and then take it, because this thing can go up very, very high and a very far distance. So these type of trades are like home run trades. They go very, very far distances. All you've done is you've dissected this whole down move by going sideways, and you've been part of the buildup with the big boy. Okay, you've been part of the buildup with the big boy in slowly turning this movement around. Okay? Okay, the key word is slowly. It doesn't happen very quickly. Just because it fails there, you don't hit the buy immediately right there and saying, okay, I'm in for the buy right here. You're going to be in a lot of trouble there. You got to wait until you're close to the take blast zone again. Okay? So you got to use your knowledge of the MPA and everything leading up until now. It is only then can you graduate to doing some trend pullback failures. Okay, so very quickly, because the video has gone very, very long, I'm going to give you the inverse one, but I'm going to run through that a little bit faster. Okay, all right, so again, apologize for the video being very long. I hope you don't mind. I really want to get this information out to you without any holes or any confusion. All right, so in an uptrend, the uptrend, boom, 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 goes up. This is the 15-minute chart again. Okay, 15-minute chart. It was supposed to do a little nice cheese. The cheese goes, but it doesn't make a higher high. Fair enough. So that means, oh, that must be set one. And as that rolls over, does whatever it needs to do, it goes down, gets a better price than the low of set one. The reason why he wasn't able to make a higher high is because this price was not good enough for the big boys. So they need to get a price lower than that. So once it comes lower, and then it does all of this stuff and gets you that money spot and everything to do the buy again, the news comes out, you find out when the trade's actually going to go, and then you take the buy, you're like, oh, there it is. And then you do the buy is going, it's going, it's going, and then it does all kinds of slow movements or goes up and it comes all the way back down, and you're like, again? Even after two sets, he's unable to make a higher high? Okay, if he's unable to make a higher high, we are now dealing with a trend pullback failure. Okay, the best ones are the ones where he hangs around here for some time and you get a cheese the next day. Okay, which means for the sell side, then you want to see if you can get in onto the sell side on this end to take it all the way down. Your minimum target for when you do these type of cheese is not going to be here at the recent low of that, nor here at the next area. Your minimum target is to go beyond the lowest price that you see. That's the minimum. Okay? Not the maximum. That is the minimum. Okay, so you want to be very lenient with your exits on these things. And every range that you see, be sure you're looking at the ranges now on the 15 instead of the 3 minutes. Okay, for your little exits and stuff. And those exits are supposed to be scale out positions for, 10%, 20%, or 30%, depending on your risk appetite, how much you want to stay in the trade, and how tolerant you are with risk. So if you're less tolerant, then take out more at the range. Yeah? Okay. So I hope this is all making sense to you. Again, this thing can have multiple ways. It can go sideways here. The other way is the news comes out and it does this. Sorry, when it does a trend pullback failure, it does this. It goes up, cannot make a higher high, and then it starts to go down like that. Then you still cannot get in. Okay, even if it does this and you're like, oh, I'm gonna get in right there. No. It's a trend pullback failure. You gotta digest this whole thing as if you're buying it again. Okay, you gotta get those buyers in so you can sell it. You cannot sell it without getting the opposite side people involved. Okay, once that happens, and if you are still supported by some news that tells you it's still gonna be onto the sell side, then you're golden. It's only then you want to get ready to trade somewhere in there to take it down. Okay, I always draw these spikes on here because during trend pullback failures, these spikes are more common. Why? Because the trend originally is this way. So you expect spikes to go in that direction because the market is expecting to go in that direction. So don't enter trades before you see some kind of a spikes in that direction. Okay? All right. Okay? Maybe you guys can say this with me. Whew! That was fun, right? It's a lot of stuff to take in. I know it's a lot of information. Watch it as many times as you can. We've went almost 30 minutes into this thing non-stop. So please take it down, take it slow. Try to understand this. That's why I wanted to do this on a whiteboard first, to really get you to understand this whole process. Okay? Why this is happening is because the big boy is gone missing. Okay? After several attempts, it's no good. It's just like how we do digestion process, right? If it's a downtrend, first attempt doesn't go down, second attempt, if it still doesn't go down, then it's going through, right? And it's gonna, or digest more and go through, digest more and go through. But so after few attempts is generally when we like to say, okay, we can now have the chance to say, let me take it in the other direction. It is only then you can qualify to do that. Otherwise, you'll be too early to change directions. Okay, so on to the next video for the concept of the eclipse.